aim is obviously to buy investments that work for us over the long term, and perhaps the most pleasing part of the past year's returns is some of our long-held investments that have performed very well for the portfolio over multiple years.
Now, these three businesses, they've been in the portfolio for years, and in the last 12 months, there's really been an improvement both in the profitability of these businesses and in their recognition by the market as well. Now, chief amongst these, Enero, it's been in the portfolio for more than 10 years, and in the last 12 months, both profits and the share price have really got a kick along from a US ad tech business that's been absolutely on a tear. We've had Mainstream that we'll touch on a little bit later as well, that has been the subject of a bidding war. And we've also got RPM Global, which is the largest position in the fund at the moment and the most recent addition. Now, with a fresh pair of eyes, I might actually bring Gaston here to comment on RPM.
Yes, thanks, Chev. Having spent a good amount of time looking at technology names in Australia and offshore, RPM is a good example of two things that lead to great returns. A, it's a great business that ticks many of the boxes of what we like in software: high growth, high margins, good cash conversion. And B, timing. You bought it at a point in time when nobody was talking about the stock. So obviously you got a great entry price. To the extent that we can do more of these going forward, that is a winning combination, and you'll see it in the returns.
And Mainstream being one of our most successful investments ever in this fund. The international fund team are bragging about their Celsius investment, and rightfully so, but this one is up there with the most successful that we have made in the business. It's one that we have also been working closely with, less so about the underlying performance of the business here, but both we and the company's management team were frustrated that the progress that they were making at a business level wasn't being reflected in the share price. The logical outcome here was always a takeover by a larger player, and we'd actually done quite a bit of work around some of the big global funds administration businesses here, acquisitions that they'd done and what price they would typically pay. And when the shares were trading at 50 and 60 cents, we had an upside scenario in our case of $1.50 or $1.60 per share. We ended up with two of those global giants fighting it out for Mainstream, and the final outcome here, well, the final outcome that we've seen at the moment anyway, is $2.80 per share. That's some 7 times our initial IPO investment some 5 years ago, and has been a wonderful returner for the fund.